Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, we start the week with worldwide economic signals on the downside. But first in the US, the economy slowed less than expected in the third quarter of 2018, as a tariff-related drop in exports was partly offset by stronger consumer spending. An almost 5% rise in defence spending also helped boost the result. The headline growth is 3.5%, but on the basis of the rest of the world users, third quarter growth grew at a rate of 3%, while on year to September 2018 it was 2.8% higher than the same period a year ago. US personal disposable income, that is after taxes, was up 5.2%, but their personal expenditure was up 5.5%. That mismatch means that personal savings growth was very weak, up just 0.6%. On a per capita basis, it fell. Perhaps that is one reason that a key measure of consumer sentiment fell more than expected, even in the face of the GDP outcome. This measure is now 2.1% lower than a year ago. The headline gains are starting to look a bit hollow. Markets have also been unimpressed by the American result, and Wall Street fell 1.7% on Friday on the news. But more interest rate rises are on the way. The Federal Reserve's Vice Chairman confirmed the central bank's plans to gradually raise interest rates and pinpointed the behaviour of inflation as the key to deciding when to stop. In Canada, there are strong signs that households there are taking on less debt. Official data shows debt growth in September was the smallest rise since 1983. In China, industrial firms are reporting lower profits on an official survey. This is the fifth consecutive month of slowing, and they rose 4.1% in September, down from 9.2% in August. In Singapore, manufacturing output unexpectedly fell in September, with output falling 3.9% year on year and suggesting their economy was finally beginning to feel the chill from trade tensions and slowing growth elsewhere. US Treasury 10-year yield ended last week sharply lower at just 3.08%, a 12 basis points drop over the week. Their 2-10 curve dipped further to under 27 basis points. The Aussie government 10-year is at 2.59%. The Chinese government 10-year is at 3.55%, while the New Zealand government 10-year is at 2.57%. New Zealand swap rates were unchanged last week for durations out to 3 years, but have slipped and flattened for longer durations. In fact, our 2-10 swap curve is now under 80 basis points for the first time since November 2016. In between, it had gotten as high as 127 basis points. And gold is at $1,233 an ounce. US oil prices a little changed today at just over $67.50, while the Brent benchmark is up $1 to $77.50 a barrel. But both are pullbacks from this time last week. The Brent price rise may be because some Chinese moves which resonate here. And the Kiwi dollar is starting the week at 65.2 US cents. On the cross rates, we're at 92 Aussie cents and 57.2 Euro cents. That puts the TWI at 69.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.